Hello everyone, and welcome to my channel. In this video, we're going to talk about direct real estate investing versus REITs. If you're interested in investing in real estate, you might be wondering which option is better for you. Should you buy and manage your own properties, or should you invest in a trust that owns and operates a portfolio of properties? What are the advantages and disadvantages of each option? How do they compare in terms of returns, risks, costs, and convenience? These are some of the questions that we're going to answer in this video, so stay tuned. First of all, let's define what direct real estate investing in REITs are. Direct real estate investing is when you purchase a property, such as a house, an apartment, or a commercial building, with the intention of earning income from renting it out or selling it at a higher price. You are the sole owner of the property, and you are responsible for managing it, finding tenants, collecting rent, paying expenses, and maintaining its value. REITs, or real estate investment trusts, are companies that own and operate a large number of properties across different sectors, such as residential, commercial, industrial, or retail. REITs are traded on stock exchanges like any other company, and they are required to distribute at least 90% of their taxable income to their shareholders as dividends. When you invest in a REIT, you are buying shares of the company, not the properties themselves. You are not involved in the management or operation of the properties, but you receive a share of the profits generated by them. So how do direct real estate investing in REITs differ in terms of ownership, management, diversification, liquidity, and taxation? Let's take a look at each aspect. Ownership. When you invest in direct real estate, you have full ownership and control over your property. You can choose which property to buy, where to buy it, how much to pay for it, how to finance it, how to improve it, and when to sell it. You also have the right to use the property for your own purposes, such as living in it or using it for your business. However, owning a property also means that you have to deal with all the hassles and headaches that come with it, such as finding tenants, fixing problems, complying with laws and regulations, and dealing with potential lawsuits. When you invest in REITs, you have partial ownership and no control over the properties. You can choose which REIT to invest in, but you cannot influence how the REIT manages or operates its properties. You also have no right to use the properties for your own purposes. However, investing in REITs also means that you don't have to deal with any of the hassles or headaches that come with owning properties. You can simply buy and sell shares of the REIT on the stock market without worrying about tenants, repairs, taxes, or legal issues. Management. When you invest in direct real estate, you have to manage your property yourself or hire someone else to do it for you. Managing a property involves finding and screening tenants, collecting rent, paying bills, maintaining records, handling repairs, resolving disputes, and complying with laws and regulations. Managing a property can be time-consuming, stressful, and costly, especially if you have multiple properties or if you encounter problems with your tenants or your property. You may also need to hire a property manager, who will charge you a fee for their services, usually a percentage of the rent. When you invest in REITs, you don't have to manage anything yourself. The REIT takes care of everything related to the properties, such as finding and screening tenants, collecting rent, paying bills, maintaining records, handling repairs, resolving disputes, and complying with laws and regulations. The REIT also has a professional team of experts who can optimize the performance and value of the properties. You don't have to worry about any of these tasks or expenses, but you do have to pay a management fee to the REIT, which is deducted from the dividends that you receive. Diversification. When you invest in direct real estate, you have limited diversification. You can only invest in a few properties at a time, depending on your budget and availability. You also have to consider the location, size, type, and quality of the properties that you invest in. If you invest in properties that are similar or close to each other, you may face higher risk if the market conditions or demand change in that area or sector. When you invest in REITs, you have high diversification. You can invest in hundreds or thousands of properties at once, with a small amount of money. You also have access to a variety of properties across different sectors, locations, and sizes. You can invest in residential REITs that own apartments, condos, or single-family homes, commercial REITs that own office buildings, shopping malls, or hotels, industrial REITs that own warehouses, factories, or distribution centers, or retail REITs that own stores, restaurants, or entertainment venues. You can also invest in specialty REITs that own unique properties such as hospitals, prisons, schools, or data centers. By investing in REITs, you can reduce your risk by spreading your investment across different properties and markets. Liquidity: when you invest in direct real estate, you have low liquidity. Liquidity is the ability to convert your investment into cash quickly and easily. Selling a property can take a long time and involve a lot of paperwork and fees. You may also have to wait for the right buyer and the right price. You may not be able to sell your property when you need or want to. When you invest in REITs, you have high liquidity. You can buy and sell shares of REITs on the stock market anytime during trading hours. You don't have to deal with any paperwork or fees related to the properties. You can sell your shares whenever you need or want to. Taxation: when you invest in direct real estate, you have more tax advantages than when you invest in REITs. You can deduct many expenses related to your property from your taxable income, such as mortgage interest, depreciation, maintenance, repairs, insurance, and property taxes. You can also defer or avoid paying capital gains tax when you sell your property by using strategies such as 1031 exchange or primary residence exclusion. However, you also have to pay income tax on your rental income at your marginal tax rate. When you invest in REITs, you have less tax advantages than when you invest in direct real estate. You cannot deduct any expenses related to the properties from your taxable income, as they are already deducted by the REIT before distributing dividends. You also have to pay capital gains tax when you sell your shares of REITs at your marginal tax rate. However, you may benefit from a lower tax rate on some of your dividends from REITs if they qualify as qualified dividends, which are taxed at 15% or 20% depending on your income level. So which option is better for you, direct real estate investing or REITs? The answer depends on your goals and preferences. If you are looking for higher returns, more control, more tax benefits, and more personal satisfaction from owning and managing your own properties, you may prefer direct real estate investing. However, you also have to be prepared for higher costs, more work, more risk, and less liquidity. If you are looking for lower costs, less work, less risk, and more liquidity, you may prefer REITs. However, you also have to accept lower returns, less control, less tax benefits, and less personal satisfaction from owning shares of a company that owns and operates properties. To help you decide which option is more suitable for you, you can use some online calculators that compare direct real estate investing in REITs based on various factors such as initial investment, expected return, expenses, taxes, and inflation. You can also read some books that provide more information and guidance on both options, such as the book on rental property investing by Brandon Turner or The Intelligent REIT Investor by Stephanie Cruson Kelly and R. Brad Thomas. You can also listen to some podcasts or visit some websites that cover topics related to real estate investing in REITs, such as BiggerPockets, The Real Estate Guys, or Million Acres. I hope you found this video helpful and informative. If you did, please give it a thumbs up and subscribe to my channel for more videos on real estate investing in REITs. Also, please leave a comment below and share your thoughts or experiences on direct real estate investing versus REITs. Which option do you prefer and why? Please make sure you hit the subscribe button and the bell icon so you don't miss any of my future videos. And if you find this video helpful, please give it a thumbs up and leave a comment below. I would love to hear from you. Thank you for watching, and I'll see you in the next video.